We did fail at the 200-day moving average. So again, the media alarms kind of go up here. It's like, oh my gosh, we failed the 200-day moving average. Time to get out of the markets. Be a little cautious with that, particularly when you have a day that was driven by a news headline. We need to see how this plays out. So here's what you need to know before the bell this morning. Big news headlines, of course, yesterday. This tariff issue, auto tariff issue was coming out. Markets sold off ahead of those auto tariffs. They were announced after the bell yesterday, so 25% tariffs on foreign automakers. So this is certainly going to impact countries like Japan, China, etc., that import cars into America. So if you're going to buy a non-American made car, it's going to cost you 25% more with this tariff. That certainly weighed on the markets, and we saw the market reverse yesterday fairly sharply, really a drag all day long. It wasn't a sharp reversal at all. It was just a slow sell-off all day long yesterday. So two things about this now that are important. First of all, we did fail at the 200-day moving average. So again, the media alarms kind of go up here. It's like, oh my gosh, we failed the 200-day moving average. Time to get out of the markets. Be a little cautious with that, particularly when you have a day that was driven by a news headline. We need to see how this plays out. So give this a day or two here. You know, this market is could rally this morning. Futures are pointing up, mildly, very weakly this morning, but we are seeing a little bit of improvement in futures. So give this a moment here to confirm that this break is valid. We've seen these kinds of breaks before, and they turn around and reverse, and they start to go higher. So again, just want to give this a little bit of a confirmation here first. But, we have this kind of rising trend line or trend channel right now in the markets coming off this bottom. If we do violate this kind of trend channel, then yes, this is going to be much more concerning. Probably need to start talking about reducing risk a bit more here. This was potentially that sellable rally that we talked about. It's unfortunate that's maybe all we get out of it, but we'll have to see what happens here. But be a little bit cautious, overreacting here just at the moment. Again, we're not going to give this a big leash, but we'll give it a little bit of a leash here to see if the markets can kind of muster up, because also, too, we're still in the end of the quarter rebalancing period. There's a lot of buying that needs to get done between now and next Monday. So, again, just want to give this a little bit of breathing room here just to confirm that yesterday's sell-off was more than just a headline-driven event. Also, too, we're still on a buy signal here from a decently oversold level. Relative strength is improving. So, again, that's a couple of reasons here. And also money flows remain positive. So, again, just a couple of reasons that we may see a little bit of buying support in here as we start to head in the end of the month. Again, but technically this was not a good day yesterday. For a lot of reasons, not a great day yesterday for the markets. But if you think it's bad in the S&P 500, I just thought I'd show you a quick look at what's happening in the Russell 2000 index. This has been a complete train wreck now going all the way back to December. There's been no real kind of pickup here at all for small cap and mid cap stocks. This really kind of runs across the board. Here's just mid cap by itself, the S&P, just the S&P 500 mid cap stocks under tremendous pressure here. So really outside of large cap stocks, and it's primarily been the value stocks. We've seen this rotation into value stocks over the course of the last couple of months in particular, and that's what's been helping hold up the S&P a bit better. But certainly not the case for small and mid caps. They're certainly being weighed on by reduced expectations. While we're still seeing earnings expectations rise for the S&P 500, earnings expectations for mid caps and small caps are absolutely flat. There's just no expectation of growth right there, and that really is a reflection of much slower economic growth coming out of the economy, which is also disinflationary to a large degree. So again, there are certainly negative pressures to the markets. Those are starting to feed into the S&P 500, and I don't want to negate the importance of kind of technically what's happening here. But again, at the same time, we don't want to go take big tradable risk in our portfolio by going completely risk off, whatever it is. Make drastic changes based on one day's move. This is something to pay attention to. And if this starts to confirm itself, we need to start taking some action, but those actions will be slow in nature. Again, you don't want to try to just make drastic moves in your portfolios all at once. Those tend to turn out to be mistakes. So again, just kind of pay attention to this. We'll keep you updated as we go. Of course, we'll cover this more in our weekend newsletter as well. But again, we'll keep that switching note before the bell this morning.